Good afternoon, agents. Welcome to Rob's Monday Mortgage Minute. I'm Rob Warner with Consumer First Financial, your local lending resource up here in the White Mountains. The last few weeks, I've been really talking about a lot of the changes affecting, our mortgage market due to the coronavirus. One of them being the verification employment process, and that's still a biggie. Making sure you're employed, not furloughed, still working the same amount of hours. So we're not going to talk about that today. Today we're going to talk about some ways to raise your credit score. As many of you probably heard, a lot of the big banks now, they've raised all their credit score requirements. Fortunately, I still am able to do some loans for borrowers with as low as a 600 FICO score on FHA and VA loans. But that being said, there's other factors to the credit report besides just the score, but it is important. It really helps out to get a better interest rate, and on a conventional loan, the PMI is much lower if you have a higher score. So these are some tips for you, okay? The first one is get rid of your collection account. What I mean by that is not paying it off, just paying it off, because if you pay a collection account, you can actually reduce your credit score. I'm talking about making an arrangement with the creditor to where you pay the account in full under the agreement that they remove that delinquent account from the credit profile, which means you should get a letter or have your borrower or buyer get a letter from the creditor saying that if they receive full payment, they will remove it. Okay, number two, get rid of your past due accounts. There's a column on a credit report called past due. It might mean they've gotten behind and now they owe, on a credit card, they might have $300 or $400 or $500 past due. These kill a credit score. The credit scoring algorithms penalize you for keeping accounts past due. So you need to bring those current as soon as possible. Number three, get rid of charge-offs and liens. So charge-offs and liens, they don't affect your credit report that much when they're older than 2 years old, but if they're recent, in the last 2 years, they can severely damage your credit score, so they need to be paid off. Some people might disagree with me on that, but if they're newer accounts, just pay them off. It really will help the score out. Number four, get rid of your late payments. So if you have a creditor you've had an account with, let's say JCPenney, and you've had it for 5 or 6 years and you have a late payment on there, you could call up JCPenney and say, look, something happened to me, I was on an accident or whatever, can you remove that late payment, and see if they'll remove it. Sometimes if you have a long history of a payment history like that with a creditor, they'll be kind and they'll remove it as long as you're nice to them. If you have a whole history of being late with it consistently on a regular basis, they probably won't do it. Next one, check your credit limits and evenly distribute the balances you are carrying. So the biggie with most people why their scores are low is because they might have a $4,000 credit limit on a credit card and they owe $3,800 on it. That's a big killer for credit scores. So if they have other accounts opened that they haven't used, they can actually take some of that and spread it around on other credit cards. So maybe they only owe $1,000 on one of them, $1,000 on another one, and distribute it evenly. Because the ultimate goal is to get down to 25% or less than the high credit limit on a card. So meaning if you have a $4,000 credit limit, they shouldn't owe any more than $1,000 on it. So that's a big one. Do not close credit cards. Even if you have a credit card you've had for 15 years and it's at 28% interest, keep it open. Just buy a tank of gas every now and then, keep it going, because the longevity of the age of these accounts they've had really helps keep your credit profile good, because it sees that you've had a credit history going way back a long time. So don't close credit cards. While we're on that topic, don't do credit card balance transfers, period. They may offer you a 0% interest rate, but when you transfer like 3 or 4 credit cards to one credit card, it's going to show a new debt opening, and it's going to show it's maxed out, and it's going to probably take 60 points off your credit score. So no balance transfers. For you realtors and self-employed borrowers out there, open business credit cards. Business credit cards, as a rule, do not report on your personal credit report unless you go delinquent on the payment. For instance, I have an American Express. It does not show on my personal credit. So therefore, I can run up a bill on that. It will not mess with my credit score. And then, well, actually, I covered this one already. Keep old credit cards active. So that's already been covered. And those are 8 tips to raise your credit score. Very good tips. If you have any questions, I'm Rob Warner, NMLS number 825102 and cell phone number 530-391-1554. Keep it safe and have a great week.